I would encourage your listeners, viewers, and readers to always be learning. So these conferences have changed my life for the better. I won't go into too much detail, but it paid for 3 college educations, a wedding, and other things.
Okay.
So always be learning.
Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We're here at the 2025 Rule Symposium in Boca Raton. I'm here with Tom Hartel. He's an individual investor that I met here at the Boca Raton, and I think he could have some really good insights for us as investors. Tom, thank you for coming on the show.
You. Good morning.
Good morning, sir. Okay, let's start off by telling us your story and how you got into investing.
Yes, thank you. It's great to be here. So I'm born and raised in Chicago. I still live there to this day. How I got into investing? My father was a business owner, and he had 5 children. So I found that the best way to spend time with my dad on a daily basis was to bring him his morning coffee and the newspaper. So at 6 a.m., knocked on the door, brought Dad his coffee, the newspaper, and he woke up, opened the headline section, set it aside, took the sports section, set it aside, and opened the financial pages. So at the age of 10, my father taught me about stocks, investing, PE ratios, earnings per share, volume, things like that. I still to this day remember the first stock I purchased at the age of 10.
What was it?
It was Dunlop Tire and Rubber Company, $1 a share.
Okay.
This was in the mid-70s, let's say, early to mid-70s.
Yeah. Okay. So as a kid, you were thrown into this when you were 10 years old, and it sounds like you had a pretty good mentor being your dad.
Absolutely.
Yeah.
Those were happy days for me.
Yeah, that's pretty cool. What was his business?
Construction.
Okay. Interesting. All right. And were your other siblings like this, or were you kind of unique in the finance?
I was unique.
Okay. And
they were into sports and music and all kinds of things.
Okay, so you probably got a preferable amount of attention from your dad because you were so interested in what he was.
Definitely.
Yeah. All right. Interesting. Okay. How did that lead to natural resource investing? How did you come to be here at the Rule Symposium?
Yes. So I've been attending conferences like this for a long time.
Okay.
Like 30-something years.
Okay.
In fact, I would utilize vacation time to come to conferences.
Okay.
Not go fishing or camping or hiking or general traveling. I would go to investment conferences.
Okay. Is this your first time at the Rule Symposium?
First time here.
Okay.
Yes.
Okay. What do you think? What do you think of this one compared? You've been to a lot of them.
Yes.
How does this one compare?
Well, I attend this conference and other conferences primarily for the keynote speakers.
Okay.
So, for example, last year, 95% of what the keynote speakers predicted came true. And that's tradable, valuable information.
Yeah.
So, for example, they suggested that gold would rise this year, copper would rise, the dollar would likely fall, and they were very specific. They predicted localized real estate challenges with single-family homes in the Virginia area and in Florida.
Okay.
All of these things came true.
Okay. Are you talking about like this conference? You were at the live stream or other ones you attended?
Last fall, there was a conference in New Orleans with many of the same speakers.
Yeah.
And most of what they said came true. So Daniela DiMartino Booth, Nomi Prince was not in New Orleans, but Daniela was there.
Yeah.
Those things came true. Many great speakers at these events.
Yeah. Okay. Interesting. Follow the smartest people in the business and take their advice is what you're saying.
Well, I think now's a good time to mention that in 2011, James Rickard spoke and was handing out these books. I read this book, and it changed the course of my life.
Oh, interesting.
I altered my portfolio in 2011 to align with this, and the result was excellent.
Okay.
And Jim was the keynote speaker here.
Yeah. Okay. What would you do specifically that changed your life?
Well, I don't want to give away all the secrets. I encourage people to go and read this book. It's still relevant today.
Okay.
Most of the things came true, and some are unfolding right now.
Huh. Okay.
So, resource investing, equities, and not traditional assets.
Okay. All right. Okay. What's your favorite investment or commodity right now?
I think silver has room to run.
Okay.
The silver typically plays catch up to a big gold run.
Yeah.
And silver typically does 2 times what the percentage change in gold has been.
Okay.
So I believe in the second half, we're going to see silver get some legs and catch up to gold. Also, platinum, the risk reward in platinum, I think is very favorable.
Okay. And so for silver, it's kind of ironic we're talking today. It hit a new 13 or 14-year high. I'm looking at pre-market right now. We're recording on July the 11th, and it was at $38. Haven't seen $38 since I've been following silver, so that's kind of interesting. What do you? Let's go into silver. What do you see with silver?
Well, the demand is there,
Mhm.
and it's in supply deficit. And for many specifics, I would direct you to the First Majestic slide deck.
Okay.
So it talks about all of the different demand drivers for silver and what's happening on the supply side.
Okay.
But from a ratio perspective, uh, once silver gets going, it really gets going.
And a ratio to what?
Gold.
Okay, a ratio to gold. So right now the ratio is probably 90 to 100, something like that. 90
Right.
ounces of silver for 1 ounce of gold.
Right. Once silver gets going, it'll approach 60 and then go from there.
Okay. All right. And as far as, are you betting on any of the silver equities?
I do own some.
Okay. What are a couple of your favorite?
Well, Coors had quite a run.
Yeah.
And Pan American, which is not a primary silver producer, has had quite a run. But the First Majestic presentation here was truly outstanding.
Okay.
And Keith made a fortune for his first set of investors, which was in First Quantum.
Yeah.
This is his encore performance.
Yeah. Okay. All right. So it sounds like you like First Majestic.
I do.
Okay. All right. They do kind of have a cult following. So when these bull runs, if you look back over the history, the last bull run with the First Majestic, yeah, they can really have a move.
That's exactly right. And what opened my eyes at this conference was the cash balance in the bank at First Majestic. It's just an eye-popping number, and it's growing.
Okay. All right. Okay. Now you like First Majestic? Are you concerned at all with their Jarrett Canyon project? They've bought that one. I interviewed Keith here last year, and he's pretty much admitted he's like, I think buying that might have been a mistake. He's hoping he can get it running. This was a year ago. I haven't talked to him since.
Yes, he didn't speak much about Jarrett Canyon
Okay.
intentionally. It was a mistake,
Okay.
and it's on care and maintenance. And the bleed has stopped. The bleeding has stopped.
Yeah.
It's on care and maintenance.
Okay.
It does have value, and it could be profitable if you reopened it today.
Okay.
I don't know if that's the plan. I tend to doubt it.
Okay.
But I think it's safe to say that eventually there would be a party interested in buying that from the company at a profit.
Okay. All right. Okay. So if you had to pick three, is First Majestic, Pan American, and Core. Is that right? Okay. All right. And platinum. You also mentioned platinum. Before we hit record, you mentioned something that platinum had reached its a 5,000-year low in relation to the gold to platinum ratio.
Yes, actually a 5,000-year high.
5,000-year high. Okay.
So I am, to some extent, a ratio trader as well.
Okay.
So when a ratio reaches a 50-year high or low, pay attention.
Okay.
When it reaches 100 or 1,000 or 5,000-year high or low, pay very close attention. So in late April, the gold to platinum ratio did reach a 1,000-year high.
Okay.
So platinum, very low cost relative to gold. So, but please keep in mind that platinum is 25 times rarer than gold. It has more utility than gold, yet sells at less than half the price of gold. So let's say that again. It really, this is important. It's 25 times more rare than gold, has more utility in industry than gold, yet sells at less than half the price of gold. So combine this with the 1,000-year high in the gold to platinum ratio, plus a low RSI, the relative strength index was fairly low at the end of April. And that's when I decided, okay, it's time to move, make a trade.
Yeah. Okay.
So how I traded that was I wrote the July 1,100 puts and received the premium.
Okay.
And then bought the July 1,300 calls, many of those. And the net cost of the trade was less than zero. I was paid to take this trade. Okay.
Oh,
so it was a net credit. Yes.
Yeah.
The trade was a net credit.
Okay. Huh. That's
and then, of course, platinum.
Yeah, then it took off.
Reverted to the mean. As
Yeah.
Rick Rule says all the time, when you have a ratio get so far out of whack, it is going to revert to the mean at some point.
Yeah.
Unless the metal in the denominator has become worthless or useless. But
Yeah.
that's not the case with platinum. So things to consider about platinum. Could it eventually become a Basel III Tier 1 banking asset? Maybe. If it does, you're looking at a quick double or triple. I believe that more family officers should take a closer look at platinum for generational wealth reasons. The general risk reward is good. I think that the odds of platinum adding $1,000 are better than, let's say, gold adding $1,000. I referred to the catching up in price earlier on this meeting. Who in their right mind would short platinum? It's in supply deficit. It's a small market, and demand is solid and predicted to remain in deficit. So, who in their right mind would short platinum? It makes no sense. Now, at this conference, there was some talk that Russia has been selling platinum to pay for the war, and that their stockpile of platinum has exhausted. So, if that is true, it's just a rumor. If that is true, that's a tradable event. Please know, and few people are connecting the dots on this, that you know what BRICS is.
Yeah.
Brazil, Russia, India, China, South Africa.
Yeah.
BRICS has a 100% monopoly on world platinum production. So if it's not security of supply for auto manufacturers, right?
Yeah.
So if BRICS ever gets their act together or decides to take advantage of their 100% monopoly, you could see platinum triple.
Yeah.
No problem.
Yeah.
Because, silver stackers, there's many of them here. They've been stacking coins and bars of silver for decades.
Yeah.
And they have big piles, in their lawn or in their basement at the bank or something,
Yeah.
right?
Midnight gardening. Yeah.
And they would sell these monster boxes of silver. Have you heard of those?
Oh, yeah.
Big monster 500 coin
Yeah.
boxes of silver. You don't see that with platinum.
Yeah.
Nobody has been stocking platinum. So the price could rise materially, and I don't think you're going to see people go into their basements and pull out piles of platinum.
Yeah.
So I believe there's more to this story. Also, few people know that hybrid EVs utilize quite a bit of platinum, more than an ICE and an EV. So from the science perspective, you can certainly study up on that. Turbocharged cars use more platinum than cars without turbochargers. So did you know, Steve, that the most popular car in the world looking out 10, 20, 30, 40 years is a hybrid EV, not an EV. It's the hybrid EV. And the hybrid EV uses a lot more platinum than people are aware of. So there's a lot going on with platinum.
Yeah.
It is truly and exceptionally rare, and there are only 0.06 ounces available per human on the planet. It is truly rare. If you owned 1 ounce of platinum, you are in an exclusive class. They're talking about Bitcoin being rare, only 21 million of them.
Yeah.
Platinum is exceptionally rare. So if Bitcoin can run from 1,000 to 100,000, we have lots of room for platinum to run higher.
Okay. So let me just summarize this real quick. We're in a supply deficit.
Yes.
Last time I looked, I think we consume about 7 million ounces a year, and we're only pulling 6 million out of the ground, something like that. The ratio got completely skewed. And when you cue into this ratio, you look at when you're at a 50-year low or high, depending on which ratio you're looking at, you should start to pay attention. Then when you start to get into the 1,000-year or 5,000-year ratio low or high, you really need to pay attention. You leverage that by selling puts and buying call options, very short dated. My God, what a timing on this! So you really took advantage of that ratio. You see that hybrids and turbocharged cars use more platinum actually than ICE engines and electric vehicles. And so far we're just seeing nothing but tailwinds for platinum.
Right. I didn't even discuss the demand rising for platinum in jewelry because it's such a better value currently than gold. And it is a beautiful metal. And then I didn't talk about long-term hydrogen, which is the cleanest form of energy known to man, requires platinum in order to be produced.
Oh.
So hydrogen might be a long-term solution to powering cars, and it will require the use of platinum.
Interesting. Okay. Oh, I've never heard that. I did not know that.
So you've heard of hydrogen fuel cells
Yeah.
and other forms of hydrogen
Yeah.
to create energy. When hydrogen burns, it creates no pollution.
Okay.
Water is the output, zero pollution. So it is popular. I ask your viewers to Google hydrogen, look at the beauty of that.
Okay. Okay. All right. Um, yeah. Very interesting. Do you have any other points on platinum? Any other?
No, not really. It's a small market.
Mhm.
Um, when it goes, it can really go.
Yeah.
If you recall, a few years ago, palladium did a moonshot. It went well over 3,000.
Yeah.
So some of these commodities, when they get going, can overshoot.
Yeah.
Nickel, you may recall a few years ago.
Yeah.
The great nickel spike
Yeah.
a few years ago. So it's possible platinum will have one of these.
Okay. Okay. Are there any platinum equities that have your interest right now?
Well, there's Bravo Mining at the show.
Uh-huh.
I was impressed by them.
Okay.
I have not done a deep dive, but I was impressed with those fellas. Their projects in Brazil.
Okay.
And one of my personal favorites is Sylvania Platinum. They pay a high dividend. They were making money at $900 platinum.
Sylvania Platinum?
Sylvania Platinum
How
out of
have I
South
not-
Africa.
Oh, Sylvania Stillwater? Is
No.
it? No?
I own that one too.
Okay.
But Sylvania Platinum, it's about $1 a share. They pay a high dividend. They're
Huh.
profitable at these current prices. And they were profitable at 900 platinum. And they have no debt with a gigantic cash balance. Huge, like a lot of cash.
Yeah. Sylvania Platinum. Do you know their market cap offhand?
Sylvania Platinum.
Okay, I'm embarrassed to say that I've never heard of these guys, or if I have, I don't remember. Maybe one of my
I
listeners.
spend a lot of time researching these little gems and jewels.
Yeah. Do you know their market cap offhand?
Not offhand.
Okay.
It's a smaller company,
Small
but it's
company.
not a small company, but it's smaller.
Okay.
Been in
Okay.
business a long time.
Okay. All right.
Well run.
Okay. What are your concerns about South Africa? I mean, it's not exactly a great place for a political bet. Power issues as far as power grid.
Right. Well, I don't. That doesn't keep me up at night because
Okay.
the mine provides jobs. If
Okay.
a government takes over a mine, they tend to screw it up, and the
Yeah.
mine closes. The jobs aren't there.
Okay.
So, and the mine provides tax revenue for the government. So, I'm not too concerned about that. And I believe that the relationship with management and the government is solid. It's
Okay.
run by locals, so that doesn't keep me up at night. It's worth the risk reward.
Okay.
When times are better in platinum, they pay a gigantic dividend.
Okay.
And so pull up the long-term chart on bigcharts.com, and you'll see the history of the company. I think that Sylvania Platinum could easily 3 or 4x in the next year or two.
Oh wow. Okay. All right. And do they trade over the counter? Do they trade
SAPLF is how I buy it.
SATL?
SAPLF.
Okay. All right. Okay. All right. Cool. Got a little golden nugget there for a platinum company. I like that. All right. What? Any other companies here at this symposium specifically that interest you?
I was impressed with Agnico Eagle.
Okay.
It's my largest holding.
Okay.
But the number of experts that paid them high compliments and high accolades, I took notice of.
Yeah.
So there were comments such as, no vendor has ever been burned by AEM.
Oh.
There isn't a vendor that will say they've been burned. They treat their employees very well. They have exceptionally high employee retention, virtually non-existent turnover.
Yeah.
And the juniors that they interact with, the CEO mentioned they own shares in 30 or 60 juniors, something like that.
Oh.
No junior miner will say they were burned by Agnico Eagle. They are of the highest caliber professionals
Okay.
and of the highest caliber integrity. Plus, I like their growth profile.
Yeah.
So at my age, I'm not looking to take on a bunch of flyers.
Yeah.
I'll take a few on, Sylvania Platinum, but I'm looking for very stable, very well-run companies. So bet on the jockey and the horse, but especially bet on the jockey.
Yeah. Okay. All right. Yeah, I like that. Okay. Any other companies that you can think of, maybe outside the resource sector or inside it, or anything?
I was impressed with the Battle Bank presentation.
Okay.
Rick Rule,
Yeah.
Frank Trotter, and his team. I am an investor in Battle Bank. What I liked, Battle Bank will go to battle every day for their clients. And they have a 17,000 person waiting list for people to sign up to become customers. They will offer a high yield cash account on idle cash, 3.7%. They're going to promote the checkbook IRA concept. I would urge your readers and listeners and viewers to study the checkbook IRA. It's an exceptional product that's approved by the U.S. government. You can own in your checkbook IRA international real estate, and also Battle Bank will happily loan on metals. And your big banks, Chase and so forth, aren't thrilled about lending on metals. This will be a focus of theirs. What I'm most excited about with Battle Bank is you'll have easy, simple, seamless access to 20 foreign currency CDs. So that excites me a lot. Please know that Frank Trotter is a career banker. His first bank, EverBank, returned 30x to his initial investor group. So you've got Rick Rule paired up with Frank Trotter, 30x, proven track record, bet on the jockey and then the horse. I'm excited about Battle Bank, and I am an investor.
Okay. Interesting. All right. I'm on the list too. Still waiting for him to get approved. We're essentially waiting for the DMV to hand out their approval certificate. Hopefully the government can get their act together. Anything else you have on your list that we didn't hit on that you'd like to say?
Well, sure. And I enjoyed our time today. I would encourage your listeners, viewers, and readers to always be learning. So these conferences have changed my life for the better. I won't go into too much detail, but it paid for 3 college educations, a wedding, and other things.
Okay.
So always be learning.
Okay.
And so, for example, Jim Rickards just came out with a new book,
Mhm.
which I hope to pick up soon. It just came out. And I'll be reading this on the plane ride back home. Larry Leopard,
Okay.
who is manages a fund, Harvard MBA, a really smart guy, friend of mine. His fund is way, way, way up this year. I don't know when Larry Leopard sleeps. I mean, he's just consuming information all the time. I'll be reading this on the plane ride home. He has been a keynote speaker at a number of these events, and I'll always be learning. There's another, these experts at the show. I met people from Belgium, Germany, Serbia, Italy, Canada, Colombia. Very smart, intelligent, hardworking people here. Some just starting out their careers. So the people you'll meet, the knowledge you'll gain is worth it. This conference offers a full refund if you feel you did not benefit in terms of knowledge gain. And so, for example, I met Lobo Tigre. Do you know Lobo?
Oh yeah.
Yeah. I met him a few years ago at one of the conferences,
Mhm.
and here's his track record. I don't know when Lobo sleeps either. He's always traveling, consuming information. But in 2023, he predicted that uranium would be where you want to be.
Yeah.
Uranium was up massively in 2023. He was right.
Yeah.
Last year, it was gold. At the November conference in New Orleans, he said, this year, copper. I mean, the guy's 3 for 3.
Yeah.
I am a subscriber.
Yeah.
So I want Lobo on my team.
Okay.
I listen very carefully when Lobo speaks. So the quality of these speakers is excellent, and it has helped me.
Okay. All right. Yeah, 3 for 3. We're at an all-time high for copper now. So he's got it. Talk about the chart.
There was one chart presented by Rob McEwen,
Mhm.
and it was produced by Tavi Costa, whom I encourage you to follow on X.
I'm having him as a guest on the show soon.
Outstanding.
Yeah.
I've never met Tavi, but I read every word that he writes, and I look at every chart he produces on Twitter.
Okay.
Yes, so Tavi prepared a chart indicating that over history, over 125 years, the average amount of money placed in resource-type equities has been 6% of all equities. So 5 to 6% of the global universe of equities has been invested in resource or resource-type stocks. Currently, that number is 1%.
Okay.
So if you connect the dots, and you just did on this
Yeah.
interview, copper reached a 5,000-year high this week, platinum a 14-year high, silver a 14-year high, gold all-time highs earlier this year. Other commodities are breaking out. So if you recall, in the decade of the 1970s, U.S. equities did nothing on real terms, adjusted for inflation. the decade ended where it started. No gains in the 1970s. However, commodities rose 500%, 1,000% during the decade of the 70s.
Yeah.
And big, safe companies like ExxonMobil rose something like 20% a year in the decade of the 70s. So at this conference, I learned if you're a bit older like myself, someone suggested, I think it was the fellow from Stansbury, you can own, let's say, 4 or 5 stocks: BHP, Vale, Rio, Tech, and Glencore. Just buy those, put them in a drawer, and forget about them. And you don't have to manage your portfolio. Forget about it, because if mining and resource investing is going to make a huge comeback and do what happened in the 70s, you're going to be just fine. And you'll be in the best of the best companies.
Yeah.
You'll do just fine.
Okay. Sound advice. Okay. So basically, if history repeats itself and we're only at a 1% average allocation now, and we go back to 5 or 6%, that's a 5 or 6x. And some of the main companies you're going to want to be in there are going to be BHP, Rio Tinto, Glencore,
Valet.
Vale. I would point out too, a lot of you guys have, some of your accounts through work, and they only allow you to buy ETFs. There is an ETF that kind of encapsulates just what Tom was talking about, and that is the PIC ETF, PICK. I have no horse in this race other than trying to help you. Tom, it's a real pleasure. Thank you for coming on the show, sir.
I can share my email address if anyone chooses to contact me.
Okay, yes, please.
So, hawksfan88 at tutanota.com. Hawksfan, like Black Hawks. 88 at tutanota.com.
Okay, there you go. Ladies and gentlemen, contact Tom. And thank you for tuning in. Go to stevebartonmoney.com for more, and have a wonderful day.